there are a lot of other data points to indicate the strength and durability of the U.S. economy. We just got jobs numbers 1 week ago today that showed at the end of last year that 292,000 jobs were created just in December of 2015. And that was the continuation of the longest streak of private sector job growth in our nation's history.
With Miranda Kahn, J.D. Hayworth back with you on Newsmax Prime. White House spokesman Josh Earnest there trying to counter news of the recent market turmoil as retail sales collapse, prompting several major retailers to downsize drastically.
Yeah, Walmart announced that it's closing 269 stores, Kmart's closing 27, and Macy's, the nation's largest department store chain, plans to cut more than 4,000 jobs. The rapid decrease of consumer spending and the shaky markets continues to raise a lot of concerns about the economy as we are just a few weeks now into the new year.
And here it is, a Friday heading into the weekend. Let's get some expert analysis from Newsmax New York. We welcome in Kyle Harrington, founder and managing partner of Harrington Capital Management. And so, Kyle, at one point today, the Dow was down more than 500 points. It's been a horrible start. Where do you think this is going?
Well, let me say this. Josh Earnest and Barack Obama and the campaign that they have, it's not a wonderful day in the neighborhood right now. And today was a perfect example of, you highlighted Walmart announcing that they're going to close 279 locations globally, I believe. And the marketplace reacted. The Dow Jones being down 500. I think it closed a little bit less down than 500 points. But here's the point, is that when you look at the jobs numbers, for one, and you dissect what type of jobs those jobs are they long-term, sustainable jobs in the economy that are going to be around? You see that the answer is there's a lot more part-time jobs in that number than you would expect. In addition, the reality is you have 94 million Americans not working at the current time. So whatever the unemployment rate is as depicted by DC is not, in my opinion, the real employment rate. And I can get into the details of that, but the point is that when you have unemployment throughout the country as it is today, when you have retail sales during the holiday season that did not meet expectations by any stretch of the imagination, and you start to add all these things up alongside international turmoil that exists very frequently, you see a market that can react very quickly on the downside. And it is amazing that how linked the international community is with respect to the markets.
Yeah, you bring up a lot of good points. Some people have actually given up looking for work altogether. Kyle, there are renewed concerns about the economy as retail sales, as you just mentioned, tumble. They were the weakest since they've been since 2009. What do you think is behind the decline, and how concerned should we be as we go forward?
Well, listen, I think that people have come to the realization that the job market is extremely difficult. So if you have a job, am I going to have a job 6 months from now? And the fact is that with that trepidation, people are a lot closer to their monies and a lot more reluctant to not spend that money in stuff or in items that they would spend money on ordinarily. And I think that carried through and was very well demonstrated through the holiday season. So I think it's consumers, which make up an enormous part of our GDP growth yearly, are a lot, and I think rightfully so, by the way. I think that if you don't feel secure in your current job, and if it's going to be automated, or if the job's not going to exist, then you're going to put a lot more money, keep a lot more money under your mattress or in your savings account in an effort to protect against the loss of a job.
Kyle, we only have about a minute left. There is some post-holiday happiness at the pump for motorists, but overall, the drop on energy prices and barrels of oil, is this going to bite everybody? What are you looking for? About 45 seconds.
Well, JD, you know, you bring up a good point because there's two sides to that. One, we benefit because we go to the pump and we're paying less and we're filling up our car for a lot less. Good thing. Bad thing is the oil and oil-related stocks, i.e. ExxonMobil's, Chevron's of the world, are laying off people tremendously, are bringing in a lot less revenue because it's cheaper to buy, you know, gas at the pump. So there's a flip side to that, i.e. why you've seen oil and gas stocks significantly decrease, and as a result, the market come down with it.
To be continued. Kyle Harrington, we thank you for your sober yet fair analysis on this Friday night as we try to have a good weekend. Hope you will have one. We thank you for your time. So, we heard what Kyle had to say. Agree or disagree about where the economy is headed? We would love to hear from you, and here's the way you let us know what's on your mind. Send your comments to newsmaxtv.com/comments. There's more ahead, so stay with us.